And in fact, all you have to do is go out and read some of the Yelp reviews of some of these custodians, and you'll see all kinds of complaints about people being nickeled and dimed and hidden fees and didn't know this and didn't know that.
Right.
And they're just, until such time that the industry becomes more standardized in its approach to the fee structure, there's going to be a lot of pain and misery out there as people adjust to this new environment of alternative investments being available, but not having the knowledge to know how to make them and not having the knowledge to know how to choose the right custodian to manage the account if you do it with your IRA.
All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and I have an amazing guest today, an IRA hero, I'm going to call him. His name is Alan Johnson. Welcome to the show, Alan.
Thanks, Aaron. I don't know if I'm a hero, but I'm glad to be here in any event.
You know what? Everyone's a hero these days. Okay, so we're going to, you know what? I'm giving you the title. That's it. You make people's lives easier. You make something more easy to understand that complicates, that I'm even a little confused by. So what do you do, Alan?
Well, okay, Aaron. I mean, you and I have known each other for years, ever since I was, all the way back to when I was with the Entrust Group. One of the self-directed IRA custodians. And then after Entrust, I went with New Direction Trust Company, also self-directed IRA custodian. And more recently, I went off on my own. I've started a company called SDIC Services. And essentially, I started the company to do what I really wasn't able to do when I was working for a custodian.
Yeah, I mean, and that's exactly it. It's such a crazy space, the IRA, self-directed IRA space, which is what we're talking about, IRA custodians, and that's the service someone needs to self-direct their IRA, whether it's into real estate or whatever the asset class is, as long as it's allowed. But IRA custodians, I always told people, you know what, shop around for your IRA custodian, but for the most part, their fees are the same and their services are the same, and they pretty much all do the same thing. So just find one that's a good fit for you and go ahead and self-direct your IRA. But you're telling me, nay, actually the prices differ a lot, the services differ a lot. And, so break into that a little bit. I know that's why you created this business, but kind of tell the story of like maybe the aha moment when you realized, wait a minute, the flaws actually, and just what's the best custodian for me, right?
Yeah, exactly. A couple of things happened. First of all, there's this issue of, will the custodian hold your asset? Even if it's allowed, it doesn't necessarily mean that all custodians that do self-directed IRAs will actually hold it. A great example that comes to mind is cannabis. That's a big issue these days, and some custodians will hold it, others will not. There's still some uncertainty around the federal laws and regulations, and until those are all cleared up, you'd have to be really very careful about picking a custodian for a cannabis investment. There's nothing in the IRS regulations that say you cannot do it, but for various business reasons, custodians don't all hold that as an investment. So, we kind of, and I was guilty of this. I got to thinking that the self-directed IRA is a commodity offering. I spent a lot of time, as you know, at the Entrust Group and with New Direction trying to differentiate what I was doing out there from everybody else. It's not an easy task to do, because one of the easiest ways to differentiate what you do is to go above and beyond in terms of helping people or assisting people with their IRA investment. And that's where the trap starts to begin, because you have to be very careful not crossing that line between offering education and information versus advice. And of course, this is something that you're familiar with at People's Capital Group. You have to be very careful to make sure when you're initially contacting people that they don't confuse the education that you're providing them with a solicitation for an investment.
Exactly. And when you do select your IRA custodian, a lot of people are a little confused on what that role really is. They're not an advisor for what's a good investment or a bad investment. They're not a company that's going to help you build wealth in the way you want to build wealth. It's simply a pass-through system. I mean, they do help you build wealth the right way, but it's not like, a financial advisor will sit down and say, okay, you have kids you need to put through college. You have, this, we need to play, you need this amount of money coming in over this period of time. You want to have your higher risk, higher return investments, your lower return, lower risk investments, and diversify. Where an IRA custodian is more like, well, we'll tell you what you can and can't do. But if you want to give all your money to your brother to start that tech company he's always been talking about, hey, it's allowed. It's up to you,
Right.
So, right. And I don't think any IRA custodians are really financial advisors. In fact, there's kind of rules against that, right? They're not even supposed to be advising you. Really.
Indeed. And, the other side of this is, going back to what I was saying earlier about how you have to be very careful about separating advice from information and education. Mm-hmm. One of the issues here is that a lot of people, even going back to the very basics of an IRA, a lot of people just feel like it's a bank account. And, I've had all kinds of people in the past come to me and say, this is my money. I can do with it what I want to. Mm-hmm. Well, strictly speaking, it's not. It's half yours and half Uncle Sam's. Well, roughly. Depends on what tax bracket you're in, actually. Right. But Uncle Sam has an interest in your IRA, and a custodian has to look out for both parties' interests, your interests and the IRS's interests. Mm-hmm. And once you understand that, you can get a little bit more of a sense of what a custodian can or can't do and what they'll feel comfortable doing. Because frankly, if the custodian finds out that you've committed a prohibited transaction, they're going to distribute your account. They really have no choice. And that in and of itself is a difficult decision to make, because some prohibited transactions, a lot of prohibited transactions, come down to facts and circumstances, and they have more to do with conflict of interest and sort of a subjective adjustment, a subjective judgment of whether or not it was prohibited or not. Mm-hmm. When you loaned money to your brother, were you doing that because you personally wanted to help them out, or was it a good deal for your IRA? Strictly speaking, it's supposed to be a good deal for the IRA exclusively. There's this rule called the exclusive benefit rule. And so your relationship with a custodian is weird. And I don't know any other way to say it, because you pay the custodian and you think because you're paying the custodian's got your back. Right. It's got your back partly, and it's got the IRS's back partly. And so you always have to be careful of the fact that, even though you hired the referee, he may make a call against one of your plays that you don't like. And
sure.
That's exactly what happens in this space.
Yeah, because IRA custodians often have to protect their licenses and make sure that, and so really an IRA custodian is a middleman. They're allowing you to not touch your IRA yet, not breaking any of the rules, but take control of it and put it into certain asset classes and work with certain people that you maybe weren't able to do previously with your IRA. So it definitely gives you more options there. But, what I find is that also, let's talk about the cost of all this, right? Because what you've created is an algorithm essentially that allows you to punch in a certain number of details and then gives you suggested IRA custodians and their fees, from what I understand, and which is an amazing tool. And I don't know why no one's created it yet. I think you're the first to create this from my knowledge. Is that correct?
Well, I think I'm the second.
Okay, all right. Well, whatever. First, second, it doesn't matter.
There's another source out there. However, it costs about $500.
Okay, all right. So exactly. So this is an interesting space where you're able to underprice the limited competition there. Yeah. And, so it's definitely interesting. We found that actually the fees are drastically different from IRA custodian to IRA custodian, right?
Yeah, they are. And look, I'm as guilty of this. I really hadn't done a lot of checking in the past, and I would say, our fees are right in the ballpark. I've told you this, Aaron, when I was working for Entrust and for New Direction Trust. Their fees look very similar on the surface. Right. You typically $50 to open an account. couple hundred, maybe $300 a year for record keeping, and then another $100 every time you go in and out of an investment. It looks like it's pretty much the same, but that's changed a lot. There is a huge demand now for alternative investing. And before I get into the nits and gnats of the various fees, just want to point out that, frankly, organizations like People's Capital Group, I think this is a good time for you to be out there in the alternative asset space because there's a lot of interest in it. First of all, the stock market. Hey, the stock market, I'm not going to go into that. Everybody knows what's going on in the stock market, and some people are comfortable with it. A lot of people are not. And so this notion that you could invest your money into an alternative investment, which, by the way, real estate is one of the primary alternative investments that the institutions, the high net worth, the ultra high net worth people get into. Because it's generally been shown, and there's a study I could point you to that illustrates the fact that these types of investments generally will return better than the market, and they're not correlated with the market moves, and they don't have the volatility that the market has.
Exactly.
The problem arises here where it's this whole issue of democratization of these types of investments. It doesn't seem fair that the ultra wealthy ought to be able to have access to these, whereas the man and woman on the street, you and I, don't have access. There are rules, as you know, about accreditation for certain types of private investments. And the issue is, should Uncle Sam, should the government, should Big Brother be looking out for your best interest, or should you as an individual be able to make your own decisions? There are a lot of people that get sucked into bad deals, granted. And it's a difficult issue for the SEC, Congress, the Treasury Department to sort through. The Department of Labor on retirement accounts. On the one hand, they want people to have access to good, solid investment opportunities. But on the other hand, they realize that most people need an advisor to help them through this issue. And there are really not any good sources of advice out there for people that want to self-direct their IRA. Again, I'm not here to give advice, but I do believe that almost every answer that people want to have is sitting out there on the web. They just need somebody to point them to it. And that's more or less what I'm doing. So even last week, the SEC announced some relaxation on the accredited investor rules. Now, this is just out. It's an intent right now for them that they're going to do this. It's not official yet. But if you're a financial advisor, you passed your Series 7 or your Series 65, according to the SEC, you are informed enough to be able to make a decision about making an investment. So the accreditation rules are relaxed for those types of individuals. Does that cover a lot of people? Certainly not. But it does show that inch by inch, the SEC, FINRA are looking at ways to allow the common investor to be able to have access to alternatives. But until the financial advisory organizations catch up to all of this, there's just going to be this big knowledge gap between people that want access to those investments but lack the wherewithal to go out and get the knowledge they need to feel comfortable in making that investment. And that's the void I'm trying to fill.
Right.
Now, and that, that's the overarching void I'm trying to fill. And then, getting back to the fees, the custodians themselves are seeing that this is a huge opportunity. There's new custodians coming in all the time. Custodians are buying each other out. They all have, over history, they all have these kludgy fee structures that they've put together. And for the most part, it used to look like they were pretty much the same. But margins are slim now with the custodians. And so just like the airlines, they're looking at ways to charge you for a pillow, charge you for a soft drink, do this, do that. And after a while, when I looked at these fee structures and looked at, the typical types of transactions a lot of the people I work with are doing in their IRA, I could see enormous differences in the annual fees, sometimes as much as a magnitude of 10.
Wow,
You know,
that's huge.
$200 versus $2,000 a year is not unusual. And unless you know exactly what you're looking at in that fee schedule that you get from your custodian, you could get hit with some fees that really turn out to be some nasty surprises. And in fact, all you have to do is go out and read some of the Yelp reviews of some of these custodians, and you'll see all kinds of complaints about people being nickeled and dimed and hidden fees and didn't know this and didn't know that.
Right.
And they're just, until such time that the industry becomes more standardized in its approach to the fee structure, there's going to be a lot of pain and misery out there as people adjust to this new environment of alternative investments being available, but not having the knowledge to know how to make them and not having the knowledge to know how to choose the right custodian to manage the account if you do it with your IRA.
Sure. So, and to clarify to our listeners, we're kind of discussing two different topics here. The idea that, financial advising, I noticed, is kind of a complicated space in itself, but also self-directing your IRA is not, you're not working with a financial advisor. You're working with an IRA custodian, and the fees are different, and the in this, really, the fiduciary responsibility is different as well, where a financial advisor has a fiduciary responsibility to work always in the consumer's best interest. The IRA custodians really have a fiduciary responsibility of both. So if you break the rules of a self-directed IRA and, give all your money to your brother because you want to help him, not because you like the investment opportunity, then that would be breaking the rules. And of course, your IRA custodian would technically have to report you. Just one example of many. And I do think that the financial advisory space is a little outdated. I think that a lot of people are confused that when you have a financial advisor for, say, a company like JP Morgan or something, they're only going to offer you products that their company offers. They're not going to go offer you a product from, a competitor down the street. And so, yes, they're trying to work in your best interest, but only for the products they offer, and so that never really made sense to me. I guess it's good to have financial knowledge. It's good to have financial planning, but a financial planner is just selling you whatever his bag of products are, and if you really want a breadth of what's out there, what's available, you do have to do your digging. You have to go on the internet and find different alternative options, real estate syndications, cryptocurrencies, the cannabis space, all great opportunities. And you got to pick and choose what you invest in. It's pretty complicated. I had a guy pitching me some cannabis opportunities the other day, and he's saying, well, you're going to double your money in 6 months. And I was like, I don't know, buddy, it sounds too good to be true. If you could double your money in 6 months, why do you have to call me up? You'd have your money already, so you got to do your due diligence there. But and a lot of people think that, right? Oh, the alternative investment space, right? Double your money in 6 months. We're not all selling that. We're not, a lot of us are just saying, listen, here's a proven, tried and true method. Invest in apartment buildings, improve the cash flow over time, refinance, exit in a couple different ways. It's a simple method. It's tried and true. And we do see a lot of people coming out of the woodwork interested in that. So just making that point out there, but so that's interesting. So you found that the difference could be tenfold for selecting the right IRA custodian, from $200 to $2,000. That's incredible. And the service as well. I have heard of other companies being kind of slow to respond. The bigger companies and maybe smaller companies are a little faster to respond. So there's some benefits there, which I know you can't really gauge so much with an algorithm.
Right. Yeah. So sure. Basically, the engine right now is optimized on finding the custodians that have the lowest fee structure, and then the service reputation part of it, that's still a work in progress. But I can tell you that one of the things that I consider, or the algorithm is considering, is employee turnover. This is an industry that typically you get a lot of small organizations. Maybe you've got 50 to 100 employees in a lot of these firms. And the opportunities for advancement just really aren't there because it's not a very much of a hierarchical organization. It's pretty flat. And so the notion that you would start with one of these custodians and then 40 years later retire, I'm not really seeing it in my experience. You get some experience at a custodian, go someplace else. So what does this mean? It means they're doing a lot of hiring of new people, training of new people, and almost everybody that comes into one of these these companies has to be taught what an IRA is, and then taught about all of the restrictions, prohibited transactions, the disqualified persons, and sure, you can look at code, section 4975, which has a lot of these prohibited transactions, the documented, and it's hard to read through, but it's not that bad. It really comes down to 6 or 7 rules. But the ways that people can juxtaposition all of these things can get really complex. And if you don't really have a good background and knowledge and know the questions to ask, somebody can lay out a scenario for you. You can say, yeah, we'll custody that account. And then later on, when you get the investment documents, the custodian looks at it and somebody in the back office says, we're not going to hold that. And then the business development person or the salesperson's kind of got egg on his face. He got the guy to sign up in good faith, open an account, move the money over, can't make the investment. All of this stuff is just really a pain for busy people to have to deal with. People are generally not in and out of investments that frequently. Take your investment offerings, Aaron. These are things where you'll go in and you'll be in there for a couple of years or more. Sure. And typically people aren't in and out of these things like they might be ETFs, stocks and bonds and the like. So that also means that they do it with their IRA, they learn it, they get the forms filled out, and then 2 years later, they're kind of back to now how do I sell that investment and what do I do? And you're just not going to remember it, as opposed to somebody that's been doing that for 5 years of his life. I know the procedures in and out. They're all pretty much the same for each custodian. And I can kind of help alert people to the kind of traps that they might fall into before they actually fall into them and suffer delays and extra charges and expedited handling fees and all kinds of other unnecessary charges that they could avoid.
So for someone considering self-directing their IRA, they need to select an IRA custodian. They need to select what type of investment asset class they want to invest in. They want to select the right people to invest in as well. The operators are the most important thing, whether you're investing in cryptocurrency, cannabis, or real estate. It's all about the operators, of course, and you want to be comfortable with the asset class. But where do they start with this? Where do they contact you in this process?
Well, okay, so I've got 2 apps. The first app is something I call the PT checker. PT stands for prohibited transaction. It's the free app. You go out. You don't even have to put in your name and email. You don't have to worry about me calling you up and trying to upsell you with other things. The PT checker, you go out, 20, 24 questions. Like the video says, I'll give you a link to that in a little bit. 20 questions, 4 minutes. 0 downside. And that'll tell you from the get-go whether or not the investment you want to make can even be done. Sure. And it's not a ruling. It's not an IRS official application, but it is based on my experience and the rules and regulations that are in section 4975 and other areas of the regulations that'll at least point people to some of the issues that they might want to talk to their custodian about before they actually sign on the dotted line and open an account. So the PT checker gives you an idea of whether or not you can even make the investment or should make the investment or might have problems if you try to make the investment. And then the next app, this is what I call the CF estimator for custodial fees. And you go in, you run that, and that's been designed to sort of get an idea of what your transaction frequency is going to be within that account. And then it will come back and it will suggest or estimate what the fees are likely to be based on your expected account activity for each of these 50 plus custodians that are in the database. So, I'd say it's a 2-step process. You run the PT checker, and then you come back and we talk about running the CF estimator. And between the 2 of those things, you ought to be in pretty good shape by the time you want to sit down and proceed with opening and funding an IRA account.
Okay, so you're really the first stop when someone's looking to self-direct their IRA. It's just probably easier to start with your systems and your service here to select what the best IRA custodian might be for their needs, and also get them thinking about what their financial goals are. It sounds like through these systems you have in place, these these apps or websites you have in place for people to put their information, they can also determine as well what they're looking to do with their IRA. And as far as what they do after that, once they select an IRA custodian, you kind of want to have the next process figured out as well. Am I going to go into a real estate syndication with People's Capital Group, or am I going to do something else? Because what you do with that IRA capital it will determine the best IRA custodian for you. So you really want to select what is your investment going to be, or at least the asset class of it, and how you're going to do that. And then you can start to determine who the right IRA custodian is for your needs. Would you say that's correct?
Exactly.
Okay. All right.
And, and the other thing, without getting into any specifics about financial planning and making investments and the kinds of returns people are looking at, I think people have been conditioned to think that if you're going to get outsized returns, you have to find something that you're going to be able to get in on the ground floor with. And what comes to mind immediately is, Bitcoin. Everybody thought they could get in on the ground floor of Bitcoin and then make huge, huge returns. Cannabis is kind of there right now. And the other area is just frankly the notion that you would I forgot what the third one was. The point being that the IPOs, the pre-IPOs, that was the
right.
People go in and they say, "Oh man, if I can just get Uber when they're still private, and then when they go public, the stock will jump."
Yeah.
I would suggest that the way to get outsized returns that is more understandable or realistic is using an investment that has leverage built in. And this is where real estate really can shine, because you can easily get low to mid double digits in a leveraged real estate investment, even though the cash that's being thrown off if you hadn't used leverage might be half of that. But the fact that you can use leverage and borrow money at 5% and turn around and invest it and into a income generating property, that's where your multiple really comes in. Now, a lot of people get frightened by something called UBIT when they use their IRA to do this. And what I say is, if the investment makes sense, don't worry about the UBIT. It'll work out, because ultimately every investment comes down to, if I don't put $1 here, what am I going to do with that dollar otherwise? And can I get an equivalent return, even counting something like unrelated business income tax? Is that still the best use of that dollar that I have to invest? So, you don't have to swing for the bleachers when you're out there making an investment. Most people would be delighted to get low double-digit returns, especially in an environment where fixed rates are approaching zero.
Right.
And, the stock market, it's having trouble. Yeah, it's had a good run up, but the volatility is hard for a lot of people to take. So this is why real estate is starting to really shine as an asset class. And it's something that I assume, you've seen as well. I mean, you're the expert on that. But just looking at the financials and how the returns can roll out and how they can play out, a leveraged real estate investment, I think, gets you where you want to go. Maybe it takes you a little bit longer, but you don't have to worry about getting that 5x return on when Uber goes public, and then you hold on to stock waiting for your next 5x return, but it turns around and heads south.
Sure. And that's the thing. It is really tried and true. We've been buying buildings in the right areas, just managing them well. And, right now I'm refinancing like 6 or 7 properties, and equity is such a powerful tool. Leverage as well. We have interest rates around the mid threes right now. That's arguably a few ticks above inflation. So it's really a perfect storm in real estate as, you have the corona happening, which kind of gives more properties coming to market, which we needed right now, more inventory, but a lot of investors trying to get out of that stock market and get into an apartment building that's going to produce cash flow. The stock market dropped, 20, 30% and then shot right back up. That's a scary thing for someone's retirement fund, exactly. Right? And an apartment building doesn't lose 30% of its value in a month. That's not something unless, you didn't have property insurance and the thing burns down or something. But for the most part, if you manage it well and you insure it properly, you're going to do okay over time. There's going to be dips and there's going to be hot markets and slow times, but our rent has increased in the last 4 months. Our collections are strong. Our cash flow is coming in. So, this is a good test, right? Hey, a pandemic, right? And we're still cash flowing. We're still doing okay. And in fact, you could argue we're doing better because we're seeing bidding wars on our flips, and we're seeing also new opportunities come out of the woodwork to buy real estate, which we haven't seen in a long time. So, real estate has been tested, and I think that even since 2008, 2009, a lot of markets are still coming back from that, and that the prices aren't that bad. So, I think with your IRA tool and our experience managing real estate, I think we're a great team here. And that's why I wanted to have you on the podcast, because we really bring a lot of value to people trying to self-direct their IRA into alternatives. And but Alan, we're running late here on time, so I'm going to wrap up here. How can people reach out to you to learn more about your service?
Well, okay. Let's see if I can do a screen share here. If you can see that,
Sure.
This is the best way to reach me. Go to that website down there, buymeacoffee.com/SDIC. There's some write-ups there. This is all brand new stuff. There's some links to the apps I was talking about. And as it says, buy me a coffee, schedule a call, $5-6. We talk things over, and that $5 or $6 can turn into savings of hundreds or more. So
heck yeah. All right. So www.buymeacoffee.com/SDIC / very good /SDIC to clarify there. We'll put that in the show notes as well. But Alan, I love what you're doing here. Your service is very affordable. It's for right now too. So if any of our listeners out there, if you're looking to self-direct your IRA, Alan is getting the service going right now. So the price is very affordable, but it's not going to stay that way for long. So go to his website there. We'll put his website in the show notes as well, and get in touch with Alan. I really like this service. It is not something that I know exists out there right now. At least for this price, it's phenomenal. So if you're looking to self-direct your IRA, contact Alan, spend the $5 or $6. It's worth it because it's a pretty crazy space with a lot of different options. And then when you do decide to self-direct your IRA, contact People's Capital Group, where you can find us at peoplescapitalgroup.com to learn more about the real estate side of it and options you have there to safely invest in real estate that's going to produce consistent cash flow and wealth growth over time. So I'm Aaron Fragnito with People's Capital Group. You can go to peoplescapitalgroup.com. We had the amazing Alan Johnson, the IRA hero, here today with us. Thank you for joining us, Alan.
Okay. Thank you, Aaron.
Absolutely, my friend. You have a good day.
Okay.